Well, we'd like to welcome everyone to our Plan Events podcast, where we're going to discuss is the 60/40 portfolio dead? Well, the death of the 60/40 portfolio split has been greatly exaggerated. If you ask your search engine, is the 60/40 portfolio dead? It'll generate about 500,000 results, many of them negative and published recently. Following a difficult year for both stocks and bonds, the increased interest in this strategy has been understandable. The 60/40 portfolio, though, really is a shorthand for a diversified portfolio asset allocation built up of 60% in equities and 40% in fixed income. The purpose of this, it's intended to generate solid returns, some upside, while minimizing risk by using the typically lower risk fixed income instruments such as bonds and cash instruments. Well, this has not happened in 2022, as stocks and bonds have both declined in tandem, so thus defeating its purpose. So the question is it then dead? Well, in this podcast, we're going to discuss two reasons why the 60/40 split in asset allocation portfolio is not dead. Well, reason number one is 2022 in a lot of cases was an anomaly, not the norm. Last year stands out in time, the past 45 years or so, both stocks and bonds declining in tandem for a full calendar year. At times, they've worked in tandem throughout parts of the year, but really, how rare is it that 2022, when we saw both stocks and bonds both going negative? Well, we can see here on our dot plot here, the top right is really where we all want to be, where stocks gained and bonds gained. And that's where you see most of the instances. At times, though, it's a purpose of having a diversified portfolio is in the top left, where stocks perhaps lost and bonds, though, gained. So you see that one hits second in the dot plot there. Now we see where 2022 was, squarely in that bottom left, where stocks and bonds left, and it's pretty alone in its company. So very rare. So 60/40 portfolio saying that it's dead is basically saying that asset allocation is dead. Well, it's good to think then, what is the alternative? Well, the alternative is timing the market. And we don't need a dot plot to tell us the many horror stories of failed market timing attempts, which is often much more common. So the point is once the Fed gets inflation under control, it will have more flexibility, and investors will likely to see that bond markets and stock markets act more in a zigzag pattern instead working in tandem. Now, reason number two we want to talk about is one of the positive side effects, that attractive income from the fixed income side is now back. So if there's a silver lining to an aggressive Fed action, it's that the most asset classes of bonds are more significantly higher yields than what they were a year ago. For example, just the general index, the yield on the Bloomberg US Aggregate Index, a widely used benchmark for investment grade bonds, was 4.25% in January of this year, which compares to 1.75% on December of 2021, a year prior. That is a significant difference, and for fixed income investors, a tremendous advantage. So we discussed there are a couple reasons and more why investors can expect that the 60/40 portfolio to not be dead, to deliver better potential returns and lower volatility going forward. We discussed a couple. Bonds today are offering higher yields than what a year ago puts us in a better position for the fixed income side of the portfolio to generate positive returns. And as we discussed, asset allocation in and of itself is not dead. 2022 was rare circumstances, and we expect that it will soon adjust. So we hope that you enjoyed this podcast discussing portfolio asset allocation. Feel free to reach out if you have any questions.